Welcome back, everyone, to We Are TPM with myself, Kyle Teixeira, and across from me, John Teixeira. This week, we are going to be discussing, are we in a buyer's market, seller's market, or both? And if you guys are interested in anything we have to talk about during this topic, other episodes, or any questions you may have for John or I, give us a call at 817-818-9039. Shoot us an email at showmethemoney@wearetpm, or come say hi in downtown Mansfield. Now, John, what's the market? Are we in a buyer's market? What is a buyer's market?
How is the market is the most common question that any real estate agent should be getting asked, right?
And is it an easy one to answer right now?
Well, it's always easy for me because I always ask people answer it in the same way that my coach many years ago taught me to do. And that depends. Are you a buyer, a seller, an investor, or a renter? Right?
Very true.
That's the question all the time. However, to our topic, is it a buyer's market, seller's market? I've been talking a lot about this with not just buyers and sellers, but also with my colleagues, right? Mm-hmm. We've been having this discussion a lot. It is a different time, isn't it? It seems like a seller's market on the surface, right? Because sellers are killing it right now, aren't they?
Yeah, it's definitely a complicated. It's a unique market, is what I meant by that. Sellers are killing it because, sellers can put things on and they will get sold. So is a simple way to put that. But what defines a seller's market? Let's talk about that first.
Well, when you have more buyers than you have sellers, which is exactly what we're looking at right now is a huge supply and demand market. So a neutral market means for every house, there's a buyer. For every, 10 houses, there's 10 buyers, right? That would be a very neutral market. When you have 15 houses and you've got 20 buyers, that's a little bit on the seller side, right? And so that's kind of how that works. How many buyers do you have in the market right now compared to how many homes do they have to choose from? And a neutral market would be equal. And if it's a seller's market, then you would have more buyers than sellers, which is what we have now, right? Mm-hmm. So in the traditional sense,
we have more demand than supply.
Exactly.
Yeah.
So you would say this is a seller's market. So why are we even talking about this right now? Why are we even asking the question, Kyle?
Well, because also, at a fundamental level, it's supply and demand. But is this a good market for buyers, in that same environment? I guess is the question we're asking. Are buyers benefiting from this seller's market?
They're killing it.
Which is a weird question to ask.
They're killing it.
They are, because the flip side of an extreme seller's market, like kind of what we're in now, where there's very low supply and an insane amount of demand, is that insane amount of demand makes prices rise quickly, especially if the environment doesn't change. If the supply and demand doesn't even out, that demand keeps driving prices up. Well, really what that means is you have a way lower time horizon on appreciation right now. What happened if you bought a house 6 months ago? Is it likely worth what you bought it for?
Yeah, it's already gone up probably 10% in that 6 month time, which just is mind blowing to even think about, but it has. Now that's not normal. That's unusual behavior. However, we've got a whole bunch of inflationary factors happening at one time. Mm-hmm. And it's not just supply and demand, because if it was just supply and demand, it would correct itself, right? Builders would just go build more houses, right? There's more supply than there's demand. Let's go build more houses and make more money. That's what they would do. But we're having trouble doing that as an industry right now for all kinds of other reasons, right? There's other inflationary pressures that are keeping that from fixing itself in a normal way.
Yeah, you got supply chains making houses longer to be built. Cost of materials going up, making these houses cost more to be built. Just a whole bunch of things that play into that role. And then on the flip side, on the that's the supply. Well, on the demand side, you also have buyers that can afford way more than they've ever been able to afford. So 3 years ago, you couldn't have afforded a $250,000 house, where now you can at a 3%, 2.5%, 3%, 4% interest rate, which used to be insanely low in the industry. Now it's, maybe it's not the best time to talk about what it currently is, but
well,
because that's one of the ways you solve a supply and demand issue, right? Is you take away the affordability.
Yeah. Either that or make it not so easy, or make more, right? Like one way or the other. That's why our government plays with our interest rate so much, right? So that they can have an impact on increasing or decreasing, the housing market from that standpoint. And sometimes it backfires on them. It doesn't always work. For instance, most people believe that increasing the interest rate actually slows the housing market down, when in reality, it creates an initial spike it creates this rush, right? That people rush to that are thinking, they're on the fence maybe, and they're thinking about buying a house. As soon as that interest rate spikes or goes up a little bit, they rush to get that done. Hey, you know what?
Yeah, but it also can hurt supply. Then people may not be wanting to move if they, if the house they're now moving into has a higher interest rate, because every seller, in most cases with real estate, every seller becomes a buyer. Not always in the same market, but they're generally either moving up or moving somewhere else. But in most cases, it's moving up.
You know what? This is an interesting discussion I've been having with my colleagues, and one of the things that's come up is there's a segment of the market that moves every year that is a larger segment of the market than we realize, right? And that is, let's call it the casual move-up buyer, the person that isn't forced to move up, but wants a little bit bigger home. Maybe they just had a baby. Maybe they're making more money and they've always wanted to live in that neighborhood. Maybe they've been dying to have a pool home. Like, they're okay where they are, right? But they really want to be somewhere else. There's a lot of those people in the world every single year that are not moving right now. They're not doing anything.
It's true. Maybe, maybe the previous move-up buyer was just trying to make it an investment property and go and keep building an investment portfolio.
Well, on a side note, we have investors now that are helping. We have entire industries being created from this problem right now. And we have investors that have come to the table with solutions to the problem I just described that allow people to go out and buy their next home with cash and then sell their home without all the worries of, where am I going to go if I sell my house, or how am I going to buy a house and beat everybody else out? There are people solving that problem right now. There's large amounts of money getting behind solving that exact problem. So if you're thinking about this, if you're listening to us, reach out to me. I can point you in the right direction and we can talk more about that. But that's a little bit of a side note. I want to get off of our topic.
Yeah.
Sellers are killing it. Prices are going up. If you're selling a house and you don't have to buy something, that's the best scenario for you right now, right? You're killing it. You're feeling like, man, it's never going to get better than this. Buyers are killing it too, Kyle, which is why we brought this up, right? Buyers are buying houses right now and looking back and going, they're looking at their Zillow's estimate or whatever, or their agent sending them something. And they're going, oh my gosh, what? I've gained $30,000 in a year. I've gained $40,000 in one. They're talking to their neighbor who's just put their house on the market for $50,000 more than they bought for last year. And they got multiple offers and they got over asking price. And they're like, oh my gosh, what's going on? Like, and everyone's thinking, how can this continue? Well, let me tell you right now.
People were asking that in 2020.
People are constantly asking that. Yeah. The pessimism of our world creates that. But let me tell you something right now. You've been hearing this literally for about 20 years, but it is still true. I don't care how much you've heard it. I don't care how sick of hearing it you are. It is still a truth. Our interest rates are at historic lows. And I think when I started hearing that, Kyle, what year were you born? You were born in what? You were about 5 years old. You were about 5 years old when I started hearing that. Historic lows, interest rates, we're going to go down to 5%. Like, people were mind blown that they were going to hit 5%. And now when they go up to 5%, people are freaking out and running for the hills. But the bottom line is, you guys, if you look at what interest rates, healthy interest rates should be over the course of the last 100 years, I think the average is like 7.75%. That's a healthy interest rate. That's a good, affordable, healthy interest rate that keeps things the way they're supposed to be. We've been at historic lows, and that historical low allows buyers to buy more home than past generations were able to in their first home, in their second home, whatever, right?
Mm-hmm. So, no, you go ahead. I mean,
I was going to keep going, but it looked like you wanted to chime in and say something. It just brings affordability. It keeps affordability way down, right? While prices are going up, you could still buy more house than you will be able to when interest rates go up. And I don't believe interest rates are going to spike up. People are freaking out about interest rates going up. But what if they go up 1 point over the next year? Is that really that big a deal over a course of a year? I mean, 1 point, like, everyone's freaking out because they're getting mortgages in the 4s.
Yeah, because they have to do something at some point, right? Because then you get the inverse problem. Like, what if this keeps going? Well, if it goes up quick enough, and that now these people who all bought don't want to sell because they don't want to sell in high interest rates. Now you got another supply problem and less buyers. So, it has to be balanced somewhere.
You know who this is really good for? Regardless of what scenario you try to foresee, and you create whatever scenario you want from the future and just make it up, right? Just go ahead. Go down whatever road you want to go down. You know who it's good for no matter what road you go down? The investor.
Yep.
The person who bought a rental house, hung on to it, rented it out. That guy is killing it. And the more times he does it, the more and more and more he's killing it.
And why is that? That's because we're talking about two different markets. There's a rental market and there's the sale market, right? They're correlated, but they're not the exact same. So if this investor is appreciating or bought another rental property, even if it's not appreciating, the rental market's going up too because of the
crazy
high demand and a low supply. Same reason.
And if the affordability of homes gets so high that people don't go into the buying market anymore, that means more people are renting, right? People have to live somewhere, whether they buy or rent. So if they can't buy, if it gets to a point where they can't buy for some reason, then they're going to rent.
Yeah. And
like, there's not a scenario that having a rent house is going to be a bad thing anytime in the future. There's just not, I can't fathom a single scenario.
Because what you're saying is say the sales market balances out, now it's going to be followed by the rental market. Like, the rental market will not slow down its demand and supply problem until the sale market does, because all those buyers that can't buy anything or are having trouble buying something become renters.
That's right. And
then they go back to being buyers later on.
You were right. You're exactly right. So how long is this going to go on for? I can tell you that I've listened to people that know what they're talking about, that are very analytical, that are talking to the right people, that are diving into the real estate statistics that matter, that are going to be able to foretell what's happening. And it is almost a foregone conclusion, as much as you can conclude anything about the future, that we are looking at nationwide at a 4-year run of basically what we're seeing right now.
Mm-hmm.
So until 2025, if you're a buyer, you should be buying whatever you can right now until 2025. Now, it's my opinion, also the opinion of these same people that are putting these opinions together, that I'm just riding their coattails and telling you what they told me. It's also their opinion that the Dallas-Fort Worth area will most likely surpass that and might surpass it by a lot, because we are just primed for so many reasons.
Yeah, I mean, rapid economic growth, but also flood of
location.
Yeah, location, flood of businesses, flood of people, flood of relocation. So yeah, it's just
we have a political climate, a financial, an economic climate, and just a location that all those things together make us the ideal place in the United States to be a homeowner, an investor, or raise a family.
And those aren't our opinions. That's just what's happening, right? I mean, it's also our opinions, but it's a fact that is what's happening. And those are the factors attributing to the unique market here in DFW. But a lot of what we talked about it applies everywhere right now.
It does.
Yeah,
absolutely does.
Same problem. It's a lot of moving around and a lot of inflationary factors.
I talk to agents from all over the world, and I have not talked to anybody that hasn't told me the same story that we're dealing with. Mm-hmm. Everywhere, every country, every state, every city, small cities, large cities, doesn't matter. I comped a home today about an hour outside of McKinney. If you're familiar with Dallas-Fort Worth, you'll know that that's the sticks, basically. And they're killing it out there. They can't sell them fast enough. I mean, I expected to see something a little bit slower. Nope. I run comps and I see things flying off the market out there. So, anyways, Kyle, let's wrap this up. This is a really good conversation. I love talking about this with people because I think it gives people a different perspective when they think, oh man, I don't want to be a buyer right now. It's a seller's market. No, it's not a seller's market. It's a buyer's market also. Now, I'll admit this. It's harder for the buyers to buy, right? Mm-hmm. They need to persevere. They need to do things differently. They need a great professional helping them, right? I hate to keep saying that, but I mean, gosh, it's so hard to do anything nowadays. And without somebody helping you, it's just 10 times harder. But you kind of need some luck too sometimes, right? But if you can do it and you persevere and you want it bad enough, you will get it done. And when you do, you will win. And do it again.
That's correct.
And win again.
And so, I mean, I guess your final answer is both.
Both.
This is what it sounds like. And that's why I said it's unique market. It's a unique answer. Previous to this market that we're seeing now, I wouldn't have asked the question, are we in buyer's market, seller's market, or both? Because we kind of just defined it on a ratio of supply and demand. Well, there's different factors here where it makes this unique. So I'd also go with both.
Yep. Definitely good discussion, Kyle. We slid off of we're in the middle of a little series right now. We slid off of our series a little bit because we felt like we really needed to talk about this. Like, too many people are talking badly about this market, or maybe not talking badly about it, but only talking positively about it from a seller perspective. And they're not recognizing that, man, you've got an opportunity here as a buyer to get in the game, and if you're already in the game, to get in stronger.
And as an investor, I mean, we are TPM, right? So these investors buying rentals, it's still a good time to buy rentals. And the weird aspect of that correlation that we haven't mentioned is that a lot of investors are selling their rental properties in this market to add to the supply, because there's such a supply problem. So they're selling rental properties to buyers. What do you think that does to the rental market? It reduces even further the supply of rentals out there. So, and for that fact, if you buy one to not be a seller, then rent rates will still be in your favor and appreciate in the way you'd hope for that investment.
People are killing it out there, Kyle, whether they're buyers or sellers right now. Get in the game. Get into the market as quickly as you can. Double down on it. What's the stock market doing lately, Kyle, in general? You follow stock market. I don't only follow it from
it's bouncing around right now.
It's bouncing around, exactly. Yeah, so. Is the housing market bouncing around?
Nope.
Nice and steady as she goes, right? A little bit faster, a little bit higher than normal than we think it over the course of time. It's not normally going to be like this, but still steady as she goes with a steady rise.
Mm-hmm.
Not.
Yeah, I mean, the stock market went on a crazy run and peaked. So That's not what's happening here with the housing market. You know, they're not exactly correlated like a lot of people think they are. Markets are separate.
Well, let's finish with this since we started talking about the seller's market, because I know you're going to know the answer to this. Okay? So don't disappoint me, Kyle. I'm putting you on the spot right here. All right. What's the number one way, if you're an investor, what's the number one way to hedge against inflation?
Real estate.
There you go. You didn't disappoint. I love it. Thank you so much.
Real estate, because it helps real estate. I mean, a lot of your real estate appreciation comes from inflation. You know, that's why it's used to hedge against it. But that's why I give you a simple answer.
If my real estate only rose in value 3% this year,
you'd be losing money.
Isn't it still more than a savings account?
Oh, yeah. No, it's definitely more than a savings account. Inflation's at 7.5, so, you know. But the housing market went up.
Now we're getting into an economic discussion that I don't think we should get into. All right, let's keep this simple because Kyle and I,
we are not financial advisors. This is not financial advice.
Keep it going. You're right about all those things. We're none of those things. We're not CPAs. We're not attorneys. We don't know what the heck we're talking about.
Take everything we say with a grain of salt, and past performance is not indicative of future results. Something like that. I think we nailed the financial advisor.
I think you nailed it. I think you got it. All right, y'all. I hope somehow that this has been helpful. Is it a buyer's market? Is it a seller's market? It's both, isn't it, Kyle?
It is. And plant your seed in either market.
Plant your seed. Plant that damn tree. Get it going. Do it again and do it again. Get
no matter
a forest.
what market you're in, you're not in it unless the seed's been planted.
That's right. All right. You want to close us out?
Yep. We are TPM. You got any questions? You want to talk to us? You want to, figure out what market it is tomorrow? It's going to be both. Give us a call at 817-818-9039. Shoot us an email at showmethemoney@wearetpm. Kyle Teixeira is out.
I'm out. We are TPM.